One question we get from people all the time is, how do I pay myself if I'm an LLC? The answer to that is it depends, as with most things. Hey there, this is attorney Sarah Holmes of Holmes Business Law P.C. We are a business and trademark law firm providing general counsel subscription services to business owners. So if you're a single member LLC and you are taxed as a sole proprietor, as most people are by default, you want to pay yourself via what we call ownership draws or ownership distributions. This simply means that on whatever cadence you want, whether it's bi-weekly, once a month, whatever works for you and your budget, you would just simply transfer money from your business account to your personal account and book it up as an owner distribution, owner payment, owner withdrawal. Now, when you do this, you really should make sure you have a good bookkeeper and a good accountant on staff, because one thing that you're not doing when you make those transfers is you're not withholding or paying any income taxes. So while that's okay, you also may want to calculate at the same time, hey, maybe I will set aside 25% of this payment into a separate business account for taxes, so that next year in April, when your accountant does your taxes, you don't get socked with a huge tax bill that you were unaware of. So every time you make an ownership distribution to yourself, you want to think, hey, how much money do I need for taxes? And maybe you set aside that money as well somewhere else for you. Now, a lot of people don't like that method. It gets difficult for them to manage. Number one, if you have revenue that's up and down, sometimes there may be a lot of money in your business bank account. Sometimes there may be not so much money in your business bank account. And so your owner withdrawals may fluctuate over time and may not be the same amount. If that's the case, remaining on that type of schedule with owner withdrawals may be the best situation for you. You always want to check with your accountant. But if that gets difficult for you and you'd rather, for example, put yourself on a payroll, you have to be very careful. If you're still a single member LLC, taxed as a sole proprietor, you should not put yourself on a payroll unless you've done an S Corp election. Now again, check with your accountant on this. We can't give you tax advice, talk to your CPA. But by doing an S Corp election, you would then put yourself on a salaried payroll. Now, just like it was when you were an employee, if you do that, you will be on a payroll. You can get a paycheck however often you want, whether it's every other week, once a month, every week. And now this time, when you are given a check by your own company or made a direct deposit, taxes will be taken out of that. In fact, then you may also be able to pay yourself some other benefits. Maybe you can open up some type of retirement savings. Maybe you can have life insurance, disability insurance, all kinds of other employment perks that you may be able to have now that you're running yourself on a payroll. So again, check with an accountant, check with a benefits provider. But if you are taxed as an S corporation, you may put yourself, or not may, you need to put yourself on payroll and pay yourself a reasonable salary. This often helps owners iron out cash flow issues, particularly as it is with paying themselves every month. It's just like when you're an employee. Hey, I know that every other week I'll get a check. I know the check is this much money, this amount, and you'll be putting away, well, not putting away, but paying your taxes as you go, so that next April, hopefully you don't have any nasty surprises. Now, an S Corp may save you taxes once your revenue gets to a certain amount. And once you get to the end of the year, if there's a lot of money remaining in your business account and you don't want to be taxed on all the money remaining in the business, you should definitely talk to your accountant about an S Corp tax election. Now, one thing that people get wrong all the time is they come to us and they say, I want to be an S Corp, please set up an S Corporation for me. There is no legal entity that's an S Corporation. That does not exist. The legal entity that's set up with the state is either a corporation or it's an LLC. So a lot of people already have LLCs set up and they think that they have to convert their entity to a corporation in order to get the benefit of being taxed as an S Corp. That is not true. That's not correct. You can still be an LLC and you just have to make the tax election to S Corp. That has to be done every year, annually, normally by March 15th, I think. Again, check with your accountant, but have your CPA or tax reporting firm do that for you and speak to them about whether that's in your best interest. So again, there's two ways to pay yourself in an LLC. It largely depends on how your LLC is taxed. So if it's a sole proprietor, pay yourself ownership distributions. You're not necessarily paying payroll taxes directly. You would pay those quarterly or at tax time and definitely set the money aside so you're not surprised. If you're an LLC taxed as an S Corp, you should be on payroll, paying yourself a reasonable salary. Taxes are taken out just as it was when you were an employee working for someone else. And then hopefully you definitely don't have any nasty surprises in April, and hopefully you're also saving some money on your taxes. So if you have any questions about your entity or how you want to run it, feel free to reach out to our office. The number is 215-482-0285. Thanks.